friends, Dave FX100 here with the Forex market preview for the following week, 25 March till the 29th March. So let's check what the items, what the red news we're gonna have next week. So there's gonna be definitely, this one is important for the kiwi. There will be interest rates, and as well what definitely should mention is Draghi speech, and the Friday there will be have the most important and most expected this Parliament Brexit votes about this Brexit. I think, per my view and per my opinions, it's a very big circus around this, and it's really funny what is going on. However, I will show you in the video what is my view about the pound and why I think it's gonna be bullish. As well, here is gonna be some cat news, and it is a lot of items to use to disinformate the retail traders, and good items for the market makers to manipulate the market. So let's go to the charts. So we are now looking to the dollar index, and as I didn't do the videos for quite some time, I will go through all my charts mainly for the majors, and with this we will check as well with the COT data what is the bias, what I think, and what I'm expecting. So we will do the top-down analysis of the all time frames I'm looking for. So I'm very sorry if this video will be maybe a bit longer, or if I will make some mistakes when I speak, because I didn't make a video for a long time, and English is not my native language, so sometimes I make some mistakes, so I'm very sorry for this. So we are looking to the US dollar index, and this is the monthly time frame. So what do we see here? We have on the 3 months chart, we are in the uptrend. On the monthly, we had as well the uptrend, which was broken here in the last year, and we had this big downtrend which created this new supply zone, and now the price is moving back. I'm still expecting the price come to this level, but let's see if that happens. On the weekly, we are in the uptrend after this break last year, and it's moving up. So this is this bullish run up, and we have this move up, retracement, move up again, and then we can see the break of this trend line, but we didn't remove this demand zone, and we are between this supply zone and the demand zone, and market is somehow ranging. What I expect, or what I think, is that we might see another wave, because at this moment we have we have actually waves 1, 2, 3, 4, and we should see the wave 5. Which will be the nice one, which will comes here to retest this broken trend line. So I think we might see the move up before it moves down. However, till we are in this between these zones, anything can happen, and it can break up or even down. So for me, I still waiting with a long-term view on this time frame. If we look to the daily, what is going on here? Let me zoom it a bit. So on the daily, we are in this channel, which started here, was tested once, 2 times, 3 times here, and now we are moving in this uptrend, and we have this trend line which was broken here. However, the break is not clear, and this is not total break and the trend change, because the candles are still touching the trend line, and it doesn't mean that we have the break. For me, the break means that I want to see the whole body candle out of this trend line, and at least 2 zones removed. So what happened here is that we have 1 zone removed, but the market retraced absolutely immediately back the next day. So this is after the FOMC, which happens on the Wednesday. On the 4-hour time frames, we can see this FOMC candle which absorbed this demand zone, and then the market moves up, retraces, and move up again. So it created a new high, higher low, and higher high. So on the 4 hours, so we could see that we are in the uptrend, and possibly from this candle we could take a long. So overall view, for me, it seems like it's a ranging, and I'm slightly bullish in this one. And what might could help us to see what is going on. So if we look to the COT data, we can see that from the last week, what was here as well, what is very important, that on the 15th this year we had the contract end. So it was in this candle. In this candle, the contract was ending. So the banks, they knew that if they have around 45,000, if they have 45,000 longs, and they knew that they will have to close the contract. So they will have to close all the positions and reopen them again. So we can see that since from 12th March till 19th, they reduced their long positions from 45k to 38, and it happened from this candle into this one. So now let's think about this. In this period, when you know that you have to close your positions anyway, what you're gonna do? You're gonna close them here, or you close them in advance. Of course, you close them for the better price here. So they close their positions, so they reduced from the 45 to 38. So the market dropped down, and then what happened? They knew that there's gonna be the FOMC. So FOMC on the Wednesday, which was 2 days later, what happened? The market dropped down. It actually touched this nicely, this ascending channel, and immediately it reversed up. So if they know that they closed their positions here, and why they should they didn't open the new longs again. But what I am suspecting, that they opened them here, down here, because in the FOMC, you might know that I don't put too much value on the news, but they said that they will not rise the interest rates in this year anymore. So what it means for you as everyone, what you think it's gonna do? It's you expect the weak dollar. So they probably let after this FOMC, they let the retail traders short the dollar, so it start to drop, and then immediately next day, they take them up. So they actually stopped out them. So I think that they use this opportunity with the ending contract to they use it to to buy even more. And I think we will probably see the still continuation, the trend up. We will see. This is gonna be very interesting, and at this moment I am not gonna take any big decision, and with just for the dollar. So what I want to see first is, of course, I have to go to the 4 hours chart, because so what I wanna see here is that I wanna see the price moving up, absorb at least this one, and then some retracement before it will continue up again. So I'm slightly bullish with the dollar, because I think that this was used to manipulate the price down and buy even more. Yeah, okay, so this is for the dollar. We continue for the next one. Okay, this is the gold. Let's start again from the monthly chart. So on the monthly, we can see that the gold is in this range, and we have this supply zone which absorbed this demand when price was moving down. Then it retested here, and we come back into this zone. However, we have this very strong bullish impulse, but it doesn't mean anything, because we are now in this monthly zone. On the weekly, we have this nice uptrend with potential zones for the longs, and we have this nice touch in this zone which is nested in this monthly zone, and after that we saw this drop, and on the daily chart it looks like this. So we had this uptrend which was broken very strongly, and it created the new zone for the potential shorts, and this is new forming channel down, which is in confluence for me with the strong dollar. So let's see in the following time what is gonna be happening. And on the 4 hours chart we can see this uptrend channel which is going up, and I expect that it will come here into this nice supply zone, and from here we will potentially see more shortings. Why I think that the gold is bearish is for the reason that if we look to the CUT data is this. So let's check that. So we can see that in the week from the 19th February to 26th, we can see that the banks reduced their longs positions from the 270k to 25 to 203, and so in here they reduced their positions about longs positions about the 20k, which caused this drop down, and then the following weeks they reduced it again. Last 2 weeks we can see a bit growth, which is these two candles where they reported growth from the 203 to 203 to 215, which was here, and from 215 to 217, which is here. This growth is not so big anymore. So what I suspect is that they creating this retracement, and they will possibly do the more shorts. We can see as well that the commercial side on here, which is the hedgers, they closed their hedge. They as well reduced their shorts because they've been shorting the price because they want to balance their price. So they closed their shorts from 471 to 428. So they actually closed something like 40 something k reducement, and here is the reducement from the around the 20k down. So and this means bearish for the gold as well. So I believe that in this zone we will see the short the bears come back into the game, because if you look like this, you can see that here around 1324, which is somewhere here, we will probably see the move down if the dollar will be strong, and that is my analysis is correct. So let's continue to the next one, and this is the euro tricky one now at this moment. So let's go to the monthly. So we have this nice 3 month downtrend channel, and we've been in the 2008 there, and whole year the price is dropping down, and I still believe that it will be going down even lower, because on the monthly we have this downtrend which was broken, price moved up, and I believe we are coming back into this zone, and it's high probability it's gonna happen. I will explain you why. On the weekly, what do we see here? We can see we have lower high and lower low, so it's confirming the downtrend, and we have this nice downtrend line which was tested last week here on the FOMC, which is this nice pin bar. It's still confirming me that we can continue down. This is on the weekly. Here I was a bit tricked. I let my emotions work on the FOMC, but I will enter this game again. So what's happening here? We have this is on the daily. So this is perfect downtrend. And now what's happened is that this demand zone moved price up, and if we look how it looks like, we can see all these moves up. Let me change the color. Okay, so if we look at this, if you look how looks these corrective moves, it's always looks more like the sideways accumulations, and then the bearish impulses are very strong. You see it's still repeating, and here as well again. So what happened here on the FOMC? We had this downtrend line which is still valid. This trend line is, oh, I'm sorry. Okay, so this trend line is still valid because per my rules it's not broken. So what happened here? We had the FOMC here, then what happened? They moved price up. This was probably the stop hunt into these zones where is this high, so a lot of people put the stop losses here, and we can see that we had another nice supply zone above. So we can see that banks removed this supply zone and do the stop losses, and they nicely filled their orders here and immediately dropping down. And on the 4 hours chart, it looks like this. So we can see this move up and immediately down and break of that trend line and continuation. So this is definitely, for me, this FOMC looks like reloading the shorts positions and for the continuation down, not definitely as a trend change as many people think. And now if you look to the COT data, it's only confirming me my theory. So let's check this. If we look to the long positions of the non-commercials, which is the investment banks, so we can see that they're still reducing their longs. They've been in the past 173k longs, and right now they are 133. So we can see even the last 2 weeks from here to here, they reduced their longs about 6k, and they didn't add any more shorts because I think that they added them somewhere here, but we don't have the data for this. So they definitely use this manipulation to reload their shorts, and I'm sure that right now there will be much more on the short side. And if you look to the net positions, it's still very negative, and I believe this will continue down. And if you look to the other side, the commercials are still pretty heavily in the hedging their position. So both sides, I think they believe the trend will continue down. So if you look to the monthly, we have trend down, weekly down, daily is down, and it's higher in the range, which is perfect to take a shorts, and on the 4 hours is down. So any retracement would be very nice to take a short. Next one is Aussie. Aussie is very similar. So what do we have here? We have actually here I had the mistake because this is not the downtrend yet. We had last year this uptrend, and here is the here is the last high, and here is the higher high, lowest one. So here was the broken the trend line, and to set that we have a new downtrend on this chart, we need to have the bullish impulse, retracement, and new low, which actually didn't happen here. I could assume it's this or something like that, but it is, but on the lower time frames. So here it's not the downtrend yet, it's the broken uptrend. Actually is the last trend line which happened here. And so we will need the impulse to make it down. And however, but this is very strong impulse down on this chart. So monthly we are in the broken uptrend, but it's going down. Weekly, let's check this one. Here is already what I said, that I couldn't draw it on the higher time frame, but on this one I'm already in the downtrend. So down, you see, so it's nice downtrend. So what's happened here? We have this downtrend line, and we have this supply zone which was tested here, and it's in control and it's moving down. So weekly down as well. On the daily, very similar situation like on the euro happened. So we have as well these lower lows and this downtrend line. And what happened, this was this fake breakout where the market makers fill the orders in this supply zone, and now they actually breaking lower. So this is definitely not the zone, and I will expect more down definitely. Here on the 4-hour charts we can see that immediately after the FOMC the banks take it all back, and this is actually the okay. So this is the demand zone because it absorbed these two supply zones. However, this zone is out and it was taken from these accumulations, so I have to fix this, and this is gonna be my new supply zone for the shorts. And it's still uptrend. However, once this is broken, it will turn to the downtrend. So what I will expect here is something like you know, it breaks down. If you look to the COT data, it's very confirming what is happening here, because let's see, we can see that the banks was in the last couple of weeks they've been rising their longs positions. However, what happened yesterday, what happened here, so we can see that they went from the 17, 19, 24, 19. Yes, so we can see that they will still rising the longs. But if we look to the shorts, they've been rising the shorts even more. So we can see that from here, from the 2012 March, which is here, into the last week where we get the data reported in the Tuesday was here. So they added even another 5k, and the week before another 5k. So they still this was actually the accumulation for their shorts, and they was waiting till the FOMC. Once they fake out all the people, and they added more shorts even. So look, they added from 68 to the 72, and they reduced their longs even before. In here they reduced their longs from 24 to the 19. So it's a big change. So they went even more aggressive to the bearish side. So we can see that in the last weeks they've been around the 74% bearish, and now they are on the 78%, and the net positions rise to the minus 52. And if we look to the other side, which is the commercials, it's the producers, they are hedging. They still pretty heavily in their hedges. So definitely I'm expecting this one go down, and Aussie is weak currency for me. Let's look to the next one, is the pound. Pound is totally different, and it's living its own life because of this circus around the Brexit. And let's check it from the higher time frames, and let's go down and try to understand what is going on here. So on the monthly we had this downtrend like this, and we had the break of this downtrend, which created this demand zone. This demand zone is right now, it was touched 3 months ago, and since then it's pushing the price up. Mostly it comes from the zone to the zone, so here is a lot of room to go to the 1.4 zones. On the weekly it's already confirming as well. So we have the downtrend which was broken, we had this demand zone which was retested, and we have new high created. So we have a higher, lower high, and higher high, which is confirming me the uptrend. And here we have the nice fresh zone where I will be very interested to take a long if the price comes here. Daily looks very interesting as well. So on the daily we have this uptrend as well. Let me take it back. But so we have the uptrend because we have still creating new higher highs in here, and now we can see that this zone was tested and the price is moving up, and I think it will not take too much time and it will go up. What do we see here as well is this nice, this is like I call it stop loss zone, because we can see 1 high, 2, 3, 4, you know, something like a support, as many retail traders is using this. We can see it's bouncing around these zones, so many people put this stop losses here when they see this, like the price is dropping down, you know, so they put the stop losses here, and once the price will be ranging here, I think it will definitely visit these levels. And if we look to the COT data, let me okay, and on the 4 hours chart, on the 4 hours we have the downtrend at this moment, and I think something like this break up, and this will happen. And look what is very interesting in here, what's happened here with the COT data. So we have still this Brexit things going on, and what is happening here? So we can see that the longs are somehow cooled off, you know, something like around the 30Ks, which is nothing bullish, and these shorts, it looks more bearish to me, you know. We've been around the hundreds. Let me move it like this. So we've been around the hundreds in the past, and now it was reduced to the 87, 70, and then in the 40s. So when it was happening, let me show you like this. So these shorts, they've been reduced in here. Now while we're moving up a bit, you can see how the market makers, how they taking these shorts out. So right now, 1 week before the Brexit, they are right now just 43, and you can see it's a big change. It's a 23K change from 66 to 33, and they didn't change the longs. So why is this probably happening? I think that they definitely know something, you know. And it was same with the first Brexit, like 1 week or 2 weeks ago. They started to close their longs positions, because if you remember the Brexit candle, we can look at it. It was here, and if you remember this candle, what happened 2 weeks ago? I was checking that in the COT data. They closed massive amount of their longs positions before it happened, and then they just added a bit longs to move it higher, and then they drop it down. So I assume that when we are seeing the 20K reducement of the shorts, just a couple days, actually it's gonna be in the next Friday, so 5 days between the Brexit's gonna happen, I think, and as well, if I consider that on the weekly we are already in the uptrend, on the monthly it's a range. I have to say it's a range, because I have just this impulse, but I have the demand zone in the control. Weekly uptrend, here is the new zone for the potential long. Daily is already uptrend. The week 4 hours, it's shifting up. So I believe that the pound will be strong. And actually, right now, as we said the chart before, that we have the euro weak, and we have the pound strong. So euro pound will be beautiful trade for the short as well. So let me continue to the next one, and it's a kiwi. On the kiwi monthly we have this uptrend, and right now we are testing the demand zone from the potential shorts down. On the daily we can see, on the weekly we have this broken downtrend, and we have this new demand zone created, which was tested and is pushing price higher, and right now we can see price ranging here. This is nothing much telling, but because we are between these zones and it's range, so anything could happen here. On the daily chart, What do we see here? So we had this broken down trend, then the price moved up, down again, retest, and now we are still ranging here. What I want to see, and I think we will see it probably because this is the zone where we again had these free bounds, so the retail traders might think that it could be the strong level for the shorts, and they probably entering shorts now because they want to enter on the top. And if you remember, I said that the next week we're gonna have the interest rates, and I think we will probably see something like what we saw on the euro, which would be you know, the fake out into this zone, which is, if we look here, which is pretty nice zone. So I think we will see to move up into this zone, from where we potentially see the more continuation down. However, let's check the data. It might will tell us a bit more. So what do we see? We can see that the market makers wasn't adding too much longs, and they wasn't adding too much shorts actually in these this is range for me, you know. I mean, on the 4 hours you can trade it like some, you know, downtrend, uptrend, but for the daily and on the weekly, this is definitely ranging the market, even on the for these couple months. So question is, what was happening here? And the data will not tell us much more, because we can see that the longs are from 15 to 17. It's still nothing big changing, and on the shorts was actually reduced from these 50Ks, and they went down, but a little bit down. So we can see that in this range is actually, we can still see the cooled off the longs positions, and we can see that the shorts are being reduced from the heavy bearish side to the negative. It's almost balanced. You can see that it's balanced, and market is moving when we have the imbalance between the sellers and buyers, and one of these sides is buying aggressively or selling aggressively. So then we can see the movements. If we look to the commercials, we can see as well very balanced numbers. So it's like 50-50. It's very neutral for me. There I don't see any side where the market could go right now. So for me it's very neutral. I stay away from this market, and I'm watching it closely, drawing my levels, and let's see what outcome it will give me. This is the Canadian dollar, and this one is very bullish for me. So what happened here? We have the 3 months uptrend. On the monthly we can see that we had this downtrend, because this is the trend line and not this one, this is the weekly. So we had this downtrend because we had the lower high and lower low. Then we had this break which created this new zone. This zone was tested and we moved up, and this higher supply zone was tested as well, and we going there again. And now we don't see this push on this time frame, but if we look to the lower time frames, that's why I always use the multi time frames analysis. So what do we see here? This is the weekly, and it's perfectly here we can perfectly see what is going on. So we have this uptrend, and we can see that every time when the new zone is created, which creates new high, retested and continue up again, removed, so the new zone, market came back, and we have this zone is retested, and definitely I want to see this, and everything is telling me that it's gonna happen. So we have the broken downtrend monthly, uptrend on the weekly. This is the daily, and we had the downtrend here, which was like this. Then we had it nicely broken with this zone, retest, move up, remove of the supply zone, move down. We had the supply zone here because it removed this zone which was here, so creating the new one for the potential long. However, I don't think this is gonna happen. They will not give another chance, I think. So anyway, I'll continue the lower one. So here is on what do we see on the 4 hours chart. So as well this trick as well on the FOMC, and so we had this zone which was removed, and I believe that many people who was actually right, many people was definitely right, which entered in this zone with the longs. But the problem is that most of them put stop losses here. So here was definitely a stop loss cluster where the banks came down, you know, and this is it. They just use this to create the liquidity, and they're moving up. So they remove this trend line, and they're creating the new trend up. And we have a nice zone here for the longs and nice zone here. So if it retraces a bit, I will be definitely interested into taking the longs for this one. If I will still get it, I will open some small position here with the bigger stop loss, because if I calculate it to the just 1% risk, I still can make it. And if you look to the data, that's definitely, let's check this. It's pretty telling that what is going on here. So we can see that the banks was pretty heavily bullish in the past, which was somewhere here. Then they reduced their longs, and the market then. Okay, let's check the data. Let's do it correctly. So it was the 5th of the February when they did a big change, and what actually happened is that they changed it from the longs. They changed their overall positioning, and the 5th of the January was here. So it started here where they changed their positioning. So it was the first bullish move up, and then the retracement. And what is happening then? You can see that their longs positions are actually, they closed a lot of positions here. They closed the shorts as well, and it as well happened on the other side. So both sides, as well the commercials, they move it up, and the retracement, and we can see that the bullish positions, long positions are growing up again. However, the shorts positions, we can see that they're going from 20, 21, and they are now just 15. And look at this big difference. Now we have this very big difference between the positions. Sorry. So here they've been just 62. The difference was the 40, and now we can see that the difference is 62 to 15. Which is, you know, much bigger. And so it's very bullish for me because of this as well. And all time frames are up now, so no reason to go shorts. So the Canadian dollar, very weak currency. Next one is the franc. Franc is very tricky for me. I don't like this currency at all, because there is a big swap, and if you're not trading it for the longs, it's very cost a lot, even with a very cross pairs. So what do we see here is that we have uptrend on the monthly, which was tested twice. Now here is the question, what is going on? And definitely I think it's gonna be broken up, because look at this. If I draw this support, like every, I don't want to say stupid, but every trader draw it, so they see the 1, 2, 3 bounces, you know, maybe here, you know, as another one, 4, 5, so it looks like strong one, you know. So here's gonna be a lot of stop losses. It's the market makers are setting the trap, and I believe that definitely we will see the move up. I'm sorry, I cannot say definitely, but I think that it's gonna be broken. Here is another reason. On the weekly we have the uptrend, and we are somehow, you know, seeing the consolidation. On the daily we have this uptrend, and I have to connect the last high and higher high, and we can see break of this trend line. However, it's not clearly break yet, and so I cannot say that this is definitely the trend change. If this zone will be broken and we will see the new low here, then I will say yes, this is the trend change, but not yet for me. And if you look to the 4 hours chart, we can see that here is the downtrend. Yes, here, because we created new low and we have removed the demand zone and creating a new supply zone. So if the market comes up, potentially this short-term short is available. But right now what I'm expecting is the price come down into this level around the 0.928, and then if we will see the break of the trend line and the move up, then I will be interested to take a longs. As well, this zone, I mean this zone is nested in this zone. So if you're looking at it like this right now, so there will be the confluence of the daily demand zone, 4 hours demand zone, and as well this weekly trend line. So when the market comes down to the 0.984 levels, we will potentially see the move up if it's happened. If we look to the COT data now, what do we see is that the banks, they still was rising the long. So for the last couple of weeks they went from the 21, and right now we are around the 35. We can see a bit reducement from the 36 to the 35 in the last 3 weeks. However, if you look to the short positions, we can see that from the 11 to the 7.5, so it's almost half. And if you look to the percentage, we are 82% for the long side. So I believe that we will potentially see this drop a little bit down, and there will be the more longs added and more continuation up. So this is something like what happened on the FOMC on other pairs, but here it's not so clear, and I think they still can come down here, because if you look, this was 15th January is this candle, and if we look to our data, so we can see that we can see that 15th is the zone, it's here where they started from 20. Look, so before they closed their longs from 28 to the 21, so it was here, and here from 15 January they started to build their longs. So here is the zone where they are interested, and they using like the bounce level where they starting the long. So I think they are maybe coming back down here to fill up the rest of the orders, and then we will potentially see the move up. So I am bearish on the francs, so the USD CHF for the longs lower. And now is the USD JPY, very tricky one for me, I must say. So here is the monthly. Monthly we have the uptrend, because we have the lower low, lower high, lower low. This doesn't look like the lower high, but if you look to this number, which is telling us where is the high, so we can see that this high is 114.737, and this one is 114.550. So it's like 20 pips lower, but it's still lower. So this trend line looks more like a support or something like that. So this is the downtrend for me. On the weekly as well, the downtrend, and here was the almost the touch this supply zone, which could put more pressure down. However, it failed short to visit it. Doesn't matter. We can see it as well on the daily that this nice uptrend was broken after this touch on the daily zone. So even on the weekly, when it wasn't touched by a couple pips, because I think it's somewhere here, we can see that on the daily it was touched. So the pressure is down, and we can actually assume that this is already the downtrend, because we have these lower lows, and we have created this one. So here I should change it to the downtrend for me, and if the price retraces down back here, I will be interested to take a long. If that happened, if not, I will not gonna definitely take any shorts down here, because then you know your stop loss, you have to put it down here. And if we look to the 4 hours chart, we can see that we had this, and we had this nice break which created this one, and we creating global low. I believe that this one is gonna be broken. If that's happened like this, actually here I see that this is as well the supply zone. I'm sorry. So I believe that we will see that. Sorry, let me fix this. So what could happen here is the break of the supply zone, then the retracement, and the continuation as is happening mostly with the supply demand strategy. If we look to the COT data, what does it tell us is this. Pretty big changes happened on the USD JPY. So we can see that the longs was very aggressive. Then they've been reduced, and the longs been added, and price was going up. So while the price was going up, the longs was added as well. However, last week we can see the big reducement in the longs. However, not in these non-commercial sides. We must check as well to the commercials, so we can see that here is a huge reducement from the 80k to the 42, which is pretty big. But as well, there is a reducement in their shorts positions. So it's probably the thing which caused these breakdown. COT data doesn't tell me much right now about the sentiment, because non-commercials are still very bullish, 80% to 20, and their positions are still pretty big. So I don't think we are ready to yet to the big short. However, the data are late. The data are from the last Tuesday, and we don't know what's happened in here. Everything could be very different, and the technicals tells it pretty clearly. So we have monthly down, weekly down, daily down, 4 hours down. I mean, if you want to take longs, it's a pretty risky business, I think. So every retracement now would be nice to short, because we have all the time frames shift down. So this was the JPY, and I think it's the last major pair. Yes. So right now we are looking to the crosses. I will go just through the couple of them, because I have lost my drawings on the trading view once my pro version was ended, membership was ended. So I have to redraw all my charts, and I'm slowly doing it, because if I draw more than 1 or 2 charts daily, then I'm over analyzing. But here I have a couple nice setups for you, my friends. So let's check this one. This is the Aussie CAD. So what do we see here? We see this break of this downtrend. We can see the bullish impulse, then the retest of this zone. Here was some more accumulation, and now we have this bullish candle. On the weekly we have as well downtrend, broken, retested, and now we are getting more bullish. On the daily, already the uptrend after this nice consolidation, and 4 hours up. So if we look, if you remember for the COT data, if you remember that, you can see that the CAD is very weak, so I expect it to go up, and the Aussie is as well weak, but it's definitely weaker than CAD. because again we have all time frames set to the uptrend and it's perfect to go long. Next one is Aussie yen, and it's again monthly downtrend, weekly downtrend. Daily we've been in this range after this broken uptrend where the market was moving up, and now when I'm seeing this bullish candle, and we are seeing already what is happening here monthly, everything is turning down. I think after these first 3 months in this year, it was the consolidations, and we will see the downtrend here. So it's the perfect time to go shorts on this pair. Next one is Aussie Kiwi. You can see the more of my charts are of the Aussie, because if I go by the alphabets order, I start with the Aussie, so I have more analysis for the Aussie. So this is the monthly downtrend. Weekly is in the downtrend as well, like this. Sorry, the trend line is not. It should be like. Sorry. The trend line should be like this, but it's still the weekly downtrend, which is actually coming into this zone. So I don't think. I think we are pretty low already to take a short here. So what I will be more interested to see is if it breaks up to move down. So on the daily is as well the downtrend, and on the 4 hours, once it breaks this low, still could go down. So on the weekly it doesn't look like here is too much space, but here is definitely still space for the shorts. This is the CAD yen. CAD yen is very nice for the shorts as well, because monthly down, weekly we have this this downtrend as well, and it was broken here, and now it seems like we will see more down. Let's see what's gonna happen here, how this zone will be played. On the daily it's a broken zone, retested this demand, and we continue down. Once this zone is out, definitely continuation down. 4 hours downtrend, nothing to speculate. This is the EuroCAD, and EuroCAD as well. Monthly uptrend, weekly broken downtrend, retested, and it's testing these highs. Daily broken downtrend, which actually has already created new uptrend, and this looks like it's gonna be broken because of the weak CAD. On the 4 hours, it's up as well. So all the sequence of the time frames are up. Beautiful. Euro yen, we have the monthly downtrend. We are now ready to make a wave 5 after the touch in this supply zone, ready for the drop. Weekly is the downtrend. Here we had this consolidation, and I believe this will continue down. On the daily we had this uptrend, which now is breaking through the trend line, but it's not the clear break yet. However, as I expect the weak euro and the yen looks stronger right now, definitely move down. And this 4 hours chart, I don't have it down yet, but look, so it's downtrend already, right? Because we broke this low and we have the lower low. And this is, I think, the last one. And euro pound is my favorite, big favorite. I have the EA set on it. So what do we see here? We had this uptrend, and then the price was consolidating for more than 1 year of this consolidation. Then it came back again, and we can see this strong impulse. We have 3 candles in a row after almost, let me check how long is that, after almost 2 years. And I believe this will make a huge move down. This is my big tip to go for shorts. Here is what's going on the weekly. Again, it's already in the uptrend after this consolidation. Daily, it's a clear downtrend. Again here, the fake breakout up, while the banks, they fill up the orders in the supply zone and continuation down. And on the weekly, on the 4 hours, sorry, it created like something like an uptrend, which was immediately defeated and destroyed by the banks. So you can see that this zone is already actually deleted. So yes, so I think this is it for me. What is the next one? Yes, these ones I don't have the finished. So for me it's everything, and thank you for watching the videos, and visit my Telegram channel where you can see the updates daily of my charts. And if you're interested in the exact levels, join my premium membership where I post all these trades, all these explanations and everything. It's a bit more advanced than what I say in these videos. So have a great rest of the weekend, my friends, and I wish you good luck in the trading. And remember, this was the first 3 months of this 2019. We had the end of the contract with the dollar, and it's mostly the time when the banks use it to trend changes or the continuation. You can see here is the last time when they changed. Here is the time when they changed had to close the contract, so they have to add the positions or to close them and reopen again. Sorry. So I believe that now we will have the big trends coming up and big opportunities. So watch it closely. Have a great rest of the weekend. Bye bye.